Hello, everyone, and thank you for joining Yale's CBAE Pathways in Business and the Environment talk today. My name is Claire Goyden, and myself and my colleague Kelly Emery are hosting conversations with sustainability-oriented professionals to discuss the work they do and the journeys that they have taken in their careers. Today, we're really thrilled to be hosting Ali Cooley. As Chief Investment Officer of Greenworks Lending from Nuveen, Ali leads the nation's largest provider of C-PACE financing, where she provides leadership and strategic vision for the firm's investment and portfolio management strategy. From the inception of Greenworks in April 2022, from its inception to the April 2021 acquisition by Nuveen, Ali served as CIO, COO, and CFO, leading Greenworks' expansion from 1 to over 3 dozen states, from 0 to over 400 individual assets, and from 2 to over 60 employees strong. Prior to co-founding Greenworks in 2015, Ali oversaw and managed the development of over $100 million in innovative financial products for deploying clean energy, leveraging private capital in Connecticut at the Connecticut Green Bank, the nation's first green bank. Ali is a joint degree MBA MEM graduate from Yale in 2012, and we're so excited to have her join today. Welcome, Ali.
Thanks so much for hosting me, Claire. Happy to be here.
So we'll start with some questions, and then we'll open it up for audience questions in the later portion of the talk. If you have any questions now, throughout our conversation, or at any time, please use the Q&A function and drop your questions in the chat for Ali. So I wanted to start sort of in the present day. I give a brief overview of your position in Greenworks, but can you tell us a little bit about your current role at Greenworks now, what you do every day, and what excites you to come into work every day?
Sure. So I'm the Chief Investment Officer. And so what that means is I'm responsible for making sure that the loans, so we're essentially a finance company. So the loans that we're making are aligning with our financial goals and the goals that we set with our investors. So that means I oversee our credit. So credit basically is the front line and making sure that our assets that we're originating, our loans that we're originating, are compliant with what we have told investors that we'll do. I oversee our legal team, which is responsible for making sure that that's documented, and the legal documents support our security. Our asset management team. So once our loans are closed, someone has to be at home and oversee our loans and make sure they perform. And then our capital markets team, which is the team that's going out and raising money that we then turn around and lend. And then I also kind of jointly with my co-founder oversee our finance and operations department. So the other part of my role that's a little bit amorphous, having co-founded the company, is really making sure that we're keeping the culture even as we grow, even as we become part of Nuveen, and making sure that we retain the pieces of our culture that continue to make us a success in the green lending space. And I might tell you a little bit about Greenworks that's probably going to be helpful for folks. So I mentioned that we're a clean energy lender. Basically, we provide financing to the commercial real estate market through something called property assessed clean energy. It's actually a public policy, and I'll get more into how I came to do that. But PACE is essentially a state-based policy where a state will say, we believe clean energy measures on buildings are a public benefit. So building owner, if you want to install solar or energy efficiency, you can basically create your own special taxing district on your property, similar to how local municipalities have financed schools or sewers or new infrastructure for centuries, actually. So it's nothing new. But what this allows building owners to do is to create their own special assessment district, use that to secure financing and raise very attractive capital to finance clean energy upgrades on their properties. And that's just been really important and transformative, in particular for the commercial real estate industry, which typically doesn't have great access to long-term capital that makes things like solar panels or other long-dated payback measures make sense.
Thank you. That was a great overview. It's exciting to hear about your role. That's very comprehensive and about the work that Greenworks is doing, and that overview of PACE financing. And I'm curious if you can speak maybe to, commercial PACE versus like residential, and we can get into that a little bit. But thinking specifically about in the commercial PACE space, what challenges do you see for Greenworks, or just in the space more broadly, that you believe are critical to address in the next couple of years to ensure Greenworks success or the success of the industry overall?
I'm realizing I didn't answer the second half of your question, of your first question, which I think segues nicely into this one. So essentially, I'm an entrepreneur at heart. Actually, both of my parents started their own businesses when I was growing up. And so for me, the most exciting thing about coming to work since 2015, when we started the company, is about kind of the newness, right? So when we started, to your point, there really wasn't much available to the commercial real estate market. PACE wasn't new on the resi side, so there was residential PACE, but it really hadn't scaled on the commercial side. And so there was a lot of work and a lot of new strategies that we had to develop. And that was really exciting for me, kind of getting out of bed and figuring out, like, what does the credit need to look like? Like, how do we build a servicing team to service these assets? Nobody had done it before. And for me, that's really exciting. And so thinking ahead to what are the challenges that we're going to be facing as a commercial PACE industry, there are a couple things, right? So I mentioned we go out and we raise money from insurance companies and other institutional investors to then go out and lend to these commercial property owners. And so as we've scaled and as the industry has grown, when we started Greenworks, there were about 3 states that had commercial PACE policies. So it was looking at it from the outside in, it was a big risk, right? Because we were betting that the market was going to grow and that states were going to pass new policies, and that happened, right? So now PACE is available in almost all of the major metropolitan areas in the US. 36 states have policy. And so as we've kind of expanded more broadly, this type of financing has become more mainstream. Commercial building owners also have the kind of exogenous pressure from their investors to go green. There's so much demand for clean energy upgrades. Really what our challenge is twofold. One is being able to scale to meet that demand. So when we started the year, I think we were 45 people. We're now almost 80. So there's just a lot of growth that we have in front of us, which is very exciting, but of course comes with cultural challenges, operational challenges, and we're very focused on making sure that we, again, retain those pieces of our culture, the entrepreneurial pieces, the pieces where people are kind of on the ground learning, figuring stuff out and continuing to grow. But we need to do that now as a much bigger group. And so definitely that's on my mind for kind of the coming couple of years. And then, of course, as we become more mainstream, there are more competitors. And so in my kind of, the main part of my job is making sure that we're raising the right money. And that money makes sense for how we need to go out and lend in the industry. And so reducing that cost of capital is a huge focus of mine. In order to stay competitive, we need to be competitive with other forms of capital. And so as we started to scale, really kind of reducing what's called a liquidity premium. So basically it's a fancy word for saying when something's unproven, it's more expensive. And so when PACE was unproven, the cost of capital was a lot more expensive, but we have to be constantly focused on reducing it as the market continues to grow. And then that's kind of the flip of that, is making sure that we're continuing to educate new investors, bringing them in, letting them kind of understand how our platform is superior, that we're kind of pioneers in the industry, that we've got best in class performance, and making sure they're educated about our platform so that the capacity is there when we need it as we scale. And then the other thing we've built on the origination side is really tentacles into every major commercial real estate market in the country. And that's a huge opportunity. So both my co-founder and I came at this work because we were environmentalists at heart, right? I did a joint degree. I wanted to do something in the clean energy space because I care about climate change. Trust me when I say, when I look at my business school colleagues that have gone into like investment banking, there are like way easier ways to make money and be successful in the world of finance than starting like a super esoteric specialty finance company. We came at this because we really wanted to have an impact. When we think about success, it's how do we touch the most amount of commercial buildings and reduce their carbon footprint? And so we've actually built sales tentacles into major commercial real estate markets. And so are there other things we can be bringing those building owners that will help them reduce their carbon footprint? PACE isn't the only answer, right? So some people may want a more efficient solar system on their roof. They may want, and they may want to do that via PPA, not with a PACE assessment. There may be other ways we can get at expanding clean energy on commercial real estate that isn't just PACE. And so thinking about, again, that newness, how do we use the channels we've built to bring more clean energy to the commercial real estate space through financing?
Yeah, that's really, exciting to think about, these legislative as well as financial and just general awareness, sort of external facets of the industry. And that, hearing you speak about how Greenworks wants to make sure it maintains its competitive, advantage and edge compared to its peers, while also preserving its culture as you grow is very interesting. We had a follow-on question in the chat that when you're speaking about the cost of capital being one of your concerns, an attendee wants to know if you can give a little bit more context about the cost of capital in your space compared to the cost of capital in general.
So I'm just going to interpret that to mean competitive products, because I think cost of capital is so specific to the type of product you're originating and the risk profile of that product, as well as the tenor. So it's hard to just kind of say there's a general cost of capital, but I'm assuming that that's just, how does it compare to our competitors? And so when we think of our competition, we think of not just other commercial PACE lenders, but also other types of commercial real estate lending. So banks, mezzanine lenders, so people going out and lending just below the mortgage, kind of like a HELOC on commercial real estate, like home equity line of credit, but on commercial real estate, and equity. And one of the interesting things about PACE is typically we are pricing higher than a senior mortgage. That's not in every case, but it's most of the cases. And we're able to do that the market is kind of willing to bear that because there are structural benefits that are superior to a commercial mortgage. So a building owner wouldn't have to pay off their CPACE assessment in order to transfer the property. In some cases, they can pass it through to their tenants. So there are benefits that enable us to charge a premium. And then on the flip of that, if you think about, how we go out and raise capital, there are several different sources of capital that we look to. The first and kind of most important is we go out and we tap the securitization markets. And there's actually a class at SOM called Capital Markets. And I didn't take it. I totally wish I had now that I'm in this job. And essentially the lowest cost of capital is always going to be rated debt issuance, right? So if you can go out and you can get some of your capital rated AAA bond debt, that is going to be the least expensive cost of capital, unless you're a bank and you have depository capital, which we are not structured as a bank, and we wouldn't be able to do this type of lending as a bank. So my focus is really how do we and it's a balance, right? Because if you're going out and raising AAA risk capital, right? So it's the lowest risk because you're also generating the lowest return. That has implications for how you're structuring the product. It has to be very, very conservative, right? So how do you balance maximizing those AAA proceeds, delivering investors what you're promising them, but also making sure that we're meeting our business goals? So it's really that kind of balance is the core of where I'm focused right now. And so, I think when you go out and you're doing a rated securitization, the benefit of that is that you're compared to other AAA products. It's very standardized. And that's why it's less expensive. There's less of a liquidity premium out there in the market.
Yeah, thank you. That was a helpful overview. You mentioned capital markets class at SOM, and I want to pivot maybe to talking a little bit about your time at Yale. And backtracking, before you founded Greenworks, you joined the Connecticut Green Bank after your graduation from the joint degree program. How did you use your time at Yale to focus your career goals? How did you develop expertise while you were here, and what attracted you to the Connecticut Green Bank after graduation?
Yeah, so I came I came to Yale because I had started my career in management consulting. I was doing basically oil and gas diligence and was completely miserable because I was like up late at night thinking about polar bears on ice caps and not able to sleep. And then during the day, I would like go to my desk and be analyzing, you know, natural gas fields in Egypt. And it just wasn't, it didn't feel like a great fit for me. And I didn't feel I could really be kind of all in that job and be successful at it. And so I was traveling a lot throughout the Middle East for that role and came back to the States and started just talking to people in the clean energy space. You know, I wanted to apply my what I had learned in management consulting, so business analysis, to doing something in the clean energy space, to scaling clean energy. I didn't really know anything about the industry at that time, and so I just started talking to people. And I got really good advice. You know, someone had mentioned the joint degree program at Yale is probably the best in the country. If you ask me right now, where is the clean energy industry going to be? I couldn't tell you, but I do know for sure it's going to be driven by the public sector. So you want to go someplace where you're going to be able to get that exposure. And it was totally spot on. So when I joined Yale, my first year, I actually worked on planning the Yale Climate and Energy Conference. And funnily enough, had arranged a panel. I don't think it was specifically on green banks, but it was really about public-private partnerships and how to scale those and how to how to take them and make that into financial products for the capital markets, which was really funny. Actually, Brian Garcia reminded me of that the other day. He like still has the brochure. He was kind of the lead. He was the head of CBA at the time. And that got me more involved with CBAE. It was really helpful to be part of that conference and that particular panel because it gave me a sense of who the players were, what they were thinking about at that time. And I wouldn't go so far as to say that shaped kind of how I thought about my time at Yale, but it definitely got me thinking about, you know, so financing is clearly kind of the main question here. How do I start thinking about financing? What's going to be critical there? And trying to align my classes with that and my internships with that as well. And I think just the other thing is that I started to really learn the vocabulary. So kind of taking those specialty classes was really helpful because it helps you just learn the vocabulary and really understand where the industry is going. And the thing I wish I had done more of was I think there are a lot of practicum classes where you do work with companies and you help them on specific projects. One of the things that I learned from kind of my time at Yale and then at the Green Bank and starting Greenworks is that if entrepreneurialism is really where you want to go, so many opportunities are actually in the details of how companies are doing business or how they're running or what their pain points are. And so if you can start to kind of get into the weeds about, you know, what are the issues, how are things actually happening, how are things actually being run or financed or whatever, and why, you can really start to generate ideas and think about, you know, what's next. And I think when I was in school, you know, that was happening in the public sector. And so being involved in those discussions with the conferences and the classes was with experts, right, was really helpful.
Yeah, it's so interesting to think about, doing work for companies and these practical classes helping to feed your entrepreneurship. That's definitely an interesting way to think about how to prepare yourself to do that kind of work. You spoke a little bit about internships, and I want to bring in a former intern of yours, George Moore, who's a current student at Yale. And I just thought it was great to get his perspective briefly. I wanted to ask George how you found Greenworks that you interned at over the summer, and as a student, what brought you there and what made you want to work there?
Yeah, so I'm a third-year joint degree student for those of you who don't know me, and I saw Allie speaking in the fall of my first year, so in 2019, pre our crazy pandemic world we've been in the last 2 years. So she was on campus speaking about Greenworks, and part of what I came back to school for was to, I didn't have a background in energy or clean energy, I'll say renewable energy and sustainability. So I wanted to come in and I'm doing the joint degree as well, so I could figure out, how are we going to scale these things? And before school, I was a CPA, and I worked with a lot of real estate owners. And then here was Ali talking about clean energy in these buildings, because I've had clients, I know they don't want to spend, they're trying not to spend money, they want to generate cash flows and pay their investors. So here's a product that finances 100% of like a clean energy improvement, and it's generating, billions, across residential and commercial, billions of dollars of activity towards, energy efficiency, solar, you name it. There were some really cool projects I saw during my summer there with, co-generators and different, some of the more unique ones are pretty interesting, and we need more of those so that other building owners see like, oh, look what they did, and they obviously have a better asset now. They got it, funded properly in a low interest way, and so that was really appealing to me. So after that, I saw Ali speak. I'd actually reached out to set up some coffee chats. I think maybe right afterwards too, I might have asked like, oh, do you guys do internships? And you might have said like, oh, reach out to me like later. So I was sort of doing that. And at the same time, I was applying to other stuff, and the EDF Climate Corps was one of those. And then I saw Greenworks on that list. So I was like, oh, perfect. So I put you guys as my number one choice. And then I think we had rescheduled the coffee chat, so then actually by the time we had the coffee chat, I was like, well, now you're stuck with me because I got matched in with you through the EDF Climate Corps. So that was how I did it. And for me, it was really about learning how are we financing, what are we doing to innovate, to get more dollars going towards these programs that, I want to see more of, that I want to spend my career in. So from that point of view, it was a great introduction to energy efficiency projects, like what are building owners actually do, like what actually moves the needles for them in terms of their energy usage. It's more than just solar, like solar obviously moves the needle a lot, but there's, if you look at their website, solar is only like 30%. So there's like another 70% that's solar, or sorry, not solar, but a combination of a different project. So getting to learn all about the different types of projects that are being done, and then also learning about what Ali mentioned, the securitization, they go out to securitize these assets, they get a green bond rating. Kind of learning about those capital markets aspects too was a really nice aspect of the summer as well, that I got that exposure. And it prompted me, like when I came back this past year, to take the capital markets class with Gary Gordon, and to learn more about like that aspect of the, the market and how that works. Like, all right, how do we get more from them to our programs? So that's sort of a long-winded little spiel, but a little plug for the EDF Climate Corps as well. I think the application is due coming up. I know you guys participated last summer again. I spoke with your most recent fellow, and I'm not, maybe you could answer if you're participating again this summer.
We are, yeah, please apply.
Yeah, so I guess that's all I have to say. Feel free to reach out to me and if you want to learn more, but yeah.
Yeah, I think Kelly put in the chat that the deadline for round 1 of Climate Corps is November 30th. So if you're interested, now is the time to act.
I guess I'll add one more piece, in terms of just being at Greenworks. It was the summer of the pandemic, so it was all remote, but I have to say, like, the culture even still shone through, like the Zoom window, so to speak. Everyone there is just super friendly, super helpful. I got to be plugged into basically anything I wanted to, whether it's the business development, the underwriting. Everyone there is just very, very friendly. So it's good to hear you talk about the culture, because it is hard to keep, like, I think that summer there was about 40 people. And now to hear, yeah, you're double in size, it's hard to maintain the culture, especially with some turnover that happens, naturally. But really great team all around there.
Thanks. It's so nice to hear from your perspective. So thanks for sharing, George.
And Ali, we do have one more question in the chat that goes back to your conversations around what you do, a little bit less about you personally. Priya asked if you know yet, I know the recently signed infrastructure bill is very recent, but is there any kind of chatter or knowledge around if the bill will help with financing green projects for commercial and residential customers, and if you have any perspective or thoughts on how it might impact your work?
Yeah, so the second piece I'll take first. One of the really great things about PACE and what we've kind of built is it's pretty localized. So we've been pretty insulated from any movement at the federal level for against renewable energy, which has served us well kind of with the political shifts in the past, call it decade. And it's a bit, of course, like always on the, if there's focus on it from the federal side, then there's just more chatter about it, to your point. And one of the things that has been most transformative for us actually is major LPs, major financial LPs, putting pressure on managers, whether it's real estate fund managers or securities fund managers, so people going out and buying securitizations to go green. That's brought us a lot of focus and attention from potential investors. So definitely having that kind of a high level federal focus on it is never a bad thing. In terms of specifically what's in the bill, it's really, I think, focused on, as it's called, infrastructure. So what we do is really squarely in the commercial real estate sector. So there's not a ton of direct overlap, but there are a couple things, and mainly I mentioned we're looking at ways to really expand our reach in solar this year. And I think there's a solar, like basically you can get cash instead of a tax credit for doing solar. And I think that would be really helpful for the commercial real estate space in particular, just because that's one area that hasn't really gotten the benefit of solar PPAs or the ability to take the ITC, just because of how these buildings tend to be, like the ownership structures of these buildings. So that particular piece would be very, very helpful, I think, for the commercial real estate in general, for the commercial real estate industry in general.
Yeah, thank you. I want to jump back to the founding of Greenworks. Again, like sort of tracing through your story, being at Connecticut Green Bank and then deciding to make the leap into entrepreneurship. Can you talk a little bit about how that went for you? And I know that you founded Greenworks with your partner, Jessica Bailey. I'm curious if you can give more context to how you made that transition, and particularly about what partnership and collaboration has sort of how it has worked for you as a tool in your career.
Sure. So the decision to go to the Green Bank was a pretty straightforward one for me. When I was looking for a role after graduating, I knew I'd gone to school to do clean energy. And so it was really a matter of just finding a place where it was a good match, right? I wasn't an engineer by training or anything like that. So, and I didn't have, years of investment banking experience and project finance. So there were kind of limited opportunities. I left in 2012, just crazy. It's almost 10 years ago. And there really weren't that many opportunities available that were just kind of that broad, clean energy financing opportunities, which is, has changed a lot now with different models coming up. So Brian Garcia, I mentioned before, had actually been the head of CBAE for my time at Yale. And he was tapped right about the time that I was graduating to become the CEO of a newly formed entity, the Connecticut Green Bank. The governor of Connecticut had seen the writing on the wall. At that point, the budget was in worse shape than it is today for the state of Connecticut. And they were essentially giving out grants for clean energy. So Governor Malloy, the governor at the time, basically said, look, like, we're not going to be able to continue to do that. Let's create a way where we can take the limited amount of public dollars we've got remaining for these things and get that money back and grow it over time. Let's see if there's a way we can create a green bank to start seeding these ideas. And what's actually kind of interesting about that time and now, a lot of the projects we did, not CPACE in particular, but a lot of the projects we did at the Green Bank were actually funded by ARA, American Recovery Act dollars. And so what might be really exciting about the infrastructure bill is they are making available funds for state and local municipalities to access kind of this type of federal funding for innovation in clean energy and financing clean energy. So who knows, maybe there's another green bank idea out there that will scale as well. But But yeah, so Brian was tasked to become the CEO. He had a bunch of openings. He actually hired me and Ben Healy, who is another joint degree my year. And we started together under the CIO, really helping to structure new financial products that took public dollars and helped to scale new products in the residential, commercial, industrial, and municipal space. And actually, I'm pretty sure it was my first day there, I met Jessica. I had never heard of CPACE before. She'd actually spent about a decade passing PACE policy across the country. She had been at a nonprofit, and she heard about PACE when it was started in 2008. She started giving out grants to different PACE programs and was just getting increasingly frustrated. She was like, this is such a great idea. Why isn't it going anywhere? And so when Brian started the Green Bank, he started talking to her about, maybe we can try to make something happen in Connecticut with PACE. So she had come on to help him do that essentially in the C&I sector. And so when I heard about PACE from her, really probably my first week or first day at the Green Bank, kind of a light bulb went off for me. What I did know about finance was that I knew I could go out, right, and get a Solar City PPA on my house because I've got a FICO score. We've all got FICO scores, right? All consumers have FICO scores. It's pretty easy to standardize credit there. On the flip side, if you're a city, municipality, you can go out, you've got a debt rating, you can go out and basically get, it's essentially a FICO score for, a large corporation or a municipality, very standardized. You can get debt, you can finance long-term infrastructure projects if you wanted to do solar that way, not super hard. But the middle, there's really nothing. And to me, it was very clear that PACE was going to help standardize this like grab bag of properties that is the commercial real estate market, right? So in our pools, we've got everything from hotels to office buildings to multifamily and all types of locations across the country. So PACE really helped standardize. And Jessica and I and the team at the Green Bank, which was really phenomenal at the time, it was a bunch of really innovative public servants. So like entrepreneurial public servants, which you don't actually hear that often. We kind of built the program from soup to nuts, figured out how to get tax collectors to bill and collect on our behalf. And then we got the state of Connecticut to basically give us our first line of credit, essentially, figured out how to underwrite the assets. And then the goal was, right, to recycle that capital. So when we started going out and marketing that first pool of loans we did, it became pretty clear that the amount of interest in the capital markets far exceeded the $40 million of product that we had. And so we kind of looked at each other and said, there's probably a business model here. We can probably raise capital a lot more cheaply than we're lending it out at. And so we figured it out. We kind of started modeling it out. We raised our initial pool of equity. And then with Brian and the team at the Green Bank's blessing, we left in 2015 to really try to build this out nationwide and build a specialty finance company with PACE. And just in terms of the partnership with Jessica, to anyone who ever wants to start a company, I do not recommend doing it alone. I cannot imagine doing it without her because it's like the highest highs and the lowest lows you can ever imagine, and just having someone to experience that with is so crucial to enjoying it and staying with it when times are tough. I think even when we happened to also get along very well, which is one of the reasons we decided to start a company together. And we also have very complementary skill sets. She has a ton of experience in the public sector. I had experience with my MBA and kind of on the finance side. So it was very complementary. And but we also happened to get along. And even when times, things go wrong when you're starting a company and you have a bunch of people like working at the company and you're trying to pass policy and you're also trying to get the capital markets on board, things inevitably go wrong. And so when I think back to my favorite times though, even it could be the darkest times, but we still found ways to laugh about it, get through it together. So highly recommend if you're ever starting a company, definitely do it with someone and hopefully it's someone that you like.
Yeah, it's great to hear about you guys, fusing your respective experience to, bring that to bear, and not only the benefits that you get from combined knowledge, but also emotional support.
The emotional piece is more important, if you ask me.
Absolutely. We have a question in the chat. Thinking about how you guys kind of found this niche in the commercial real estate market and founded Greenworks with that vision. An attendee is asking if profit maximization was not an issue. where do you think funding should go to achieve the most impact? So maybe this is referring to the suite of, energy efficiency improvements that you all help finance. Maybe it's talking about particular building stocks. I'm curious how you interpret that question and what you think your answer might be.
That's actually a really good question. And George, I not to put you on the spot, but you did a lot of research on this when you were with us. So do you have like a point of view on that?
Yeah, I'm not sure if if the question is meant to be like in general around the world, like to pay people in Brazil to not do deforestation, if that's like an answer, or if it's specific to real estate and buildings. But the most cost effective one, the most easy project to sell for real estate is the lights. Is what I remember. They have a great payback and they don't cost a lot. So that's, if you don't have that much funding and you want the most impact, the lighting seemed to be low-hanging fruit for a lot of building owners. But yeah, in terms of broadly, I wasn't totally sure on the question if they were industry specific or not.
Yeah, and I guess I would say that if money, like profit, weren't an issue, the thing I would suggest is just lending at cost, because it's really like what I found in the commercial real estate sector in particular is that and sorry to put you on the spot, George, I realize that was kind of mean, but I appreciate the answer, and I would not have gone to deforestation. You're probably right. I think that the thing I've noticed is that commercial building owners, they're business owners, right? They're not going to do something just because. It has to make sense for them. And so the lower we get our cost of capital, so if we had no profit motive, we were kind of a nonprofit and we just lent at cost, I actually think that would just be the easiest way to maximize impact, because basically people are going to make a kind of rational decision. And one of the cool things about PACE is it allows you to, the first 4 years, I never mentioned, other than to, internally to our team, because that's something that I think motivated a lot of people to come work with us. I never mentioned the environmental impact we were having when we were kind of going out and finding new partners. It was really about why this was good for them, why this is good for their cash flow. And so the lower you get that rate, the lower you get those payments, the more measures that will make sense, and the more kind of impact you can have.
Great answer to a very tricky question. So I appreciate both of you tackling that. I mentioned up top that Greenworks was acquired by Nuveen in April 2021, which is, just 5 or 6 years after you all founded the company. How did that come about? What brought you to that decision? And given that, where do you hope the company goes from here in the future?
Yeah, so the reason we ended up selling the company was actually because we started to get people randomly asking us if we were for sale. So when we had raised outside capital, we had done 3 rounds of investment. So when we started we had, I think, 3 inbounds at the end of 2019, kind of in pretty short order. And so we kind of looked at each other and said, we owe it to our investors to explore these, right? You don't get calls every day asking, do you want to sell your company? And so we hired an investment banker to run a process for us, because, we were like, how do we compare them? We should probably make a pretty formal process if we're getting this much interest. And Nuveen had been basically the funder of our debt. So when George and I mentioned securitization, when we went out and issued kind of investment grade rated, single A to AAA rated debt, Nuveen was the main purchaser of that debt. They're the asset management subsidiary of TIA-CREF, Teachers Investment and Annuity Association. And they're huge, right? They're everywhere. And so they were a natural fit to include in our process. But as we kind of got through it, one of the things that Jessica and I realized pretty quickly was that, we were gonna need to stay with the company because everyone was betting on our growth. And we wanted to make sure that whoever we were partnering with was going to have the same vision we were going to have, was going to care as much about the culture we had built as we cared. And it was pretty clear from almost 5 years. So we started working with Nuveen in 2017. We actually met them in 2015. It was clear from our interactions with them that there was a lot of kind of shared vision in terms of where the industry was going, in terms of where we fit within their strategy. They are still very focused on ESG as an investment strategy. And so it felt like that would be the right place to continue to grow the platform. And so that's how we wound up with them at the end of this process that was interrupted by COVID actually for a couple of months.
That's great. I know we're just about time, but we started a couple minutes late, so we might go over just a couple minutes. I think I have one last question, if that's all right, Allie.
No problem.
Yeah. This has been such a great comprehensive overview of the space and where Greenworks has fit into it and how you developed your path. I think a lot of people, especially students, would be interested to know, as you consider hiring talent or just looking sort of at the PACE space more broadly, what do you look for early to mid-career candidates?
Great question. So actually, this hasn't changed all that much since we started. One of our very first hire, who now runs all of our business development originations, basically had this saying, we look for grit and sparkle, and it actually really hasn't changed. So basically what that means is we want people who are able to, turn on the charm. We're essentially partially a sales organization, right? So people who present well, kind of have great communication skills, but then also we're afraid about rolling up their sleeves, kind of digging in, helping a teammate out, and like figuring stuff out, as we go. And I think that's one of the things we're really focused on protecting, is just that spirit of like, okay, let's dive in, let's research this issue, let's figure out our view and how we implement it and make that change. And so that hasn't changed that much. I think the context has changed a little bit, right? Now we're a part of a much larger organization. And so the kind of grittiness means a little bit more about being an entrepreneur as well as an entrepreneur, and like being able to run the traps without getting too bogged down in bureaucracy, right? And then also continuing to, as we go up market in the commercial real estate space, really be very polished and have a network in that space. Yeah, I think it's funnily has not changed that much. And we funny story about that. I actually have on our team, we have many of our senior team have actually started very early with us, right? So 2015 to 2017, right when we were just getting off the ground. And a lot of them have like come to us later and said, when I started, my job was both way above me and also like way beneath me, right? They were kind of doing, when you're kind of building a company from nothing, you do things that are, very boring. Like I spent a lot of time setting up HR systems, which I had no qualifications doing, and also B, it was like very rote. And that's the same across the board. And so it's really that kind of willingness, even if the content is a little bit different, but also to take on stretch assignments and raise your hands for those. I think it maybe gets down to being like having less of an ego and just being willing to pitch in, but also having confidence that you'll be able to take on those stretch assignments.
Yeah, that's, I think, a great lesson for everyone, just building that confidence and being able to dive in. Yeah, offering grit and sparkle. I like that, kind of putting your best self forward and being able to tackle those really difficult challenges. I think that might be a good place to close out. I think you've given us a lot of wisdom to consider for both students and others attending. We wanted to thank you for joining. I want to thank Allie for sharing her very valuable insight, and to George for his as well, and speaking with us today. Please be on the lookout for future CBAE Pathway events, where we'll feature other careers and other perspectives in business and the environment. And again, thank you for joining today, and have a good weekend, everyone.
Thank you, Claire.